Hello everyone, welcome back. In this lecture, we will cover money market instruments. Let's look at what we will learn from this lecture. First of all, we'll cover money market and different types of money market instruments like federal funds market, treasury bills, repurchase agreements, commercial paper, and finally certificates of deposit. Let's start with the money market. Money market is the market for short-term debt instruments. So it helps the investors who want to invest in liquid assets. In the meantime, money market helps the borrowers to borrow money for a short period of time. Federal funds market. Banks around the world are required to maintain a reserve to their central bank, or banks in the USA are required to maintain reserve to their local Federal Reserve Bank. Therefore, institutions with excess reserve can lend their money to the institution who need fund for a short period of time. So, federal funds market is the market for unsecured interbank loans. Typically, these loans are overnight transactions and the interest rate of federal funds market are known as federal funds rate. In Bangladesh, federal funds market is known as call money market and interest rate of call money market is known as call money rate. Now let's look at treasury bills. Treasury bills are debt security issued by the US Treasury, or treasury bills are also issued by the governments around the world to borrow money for a short period of time from the public. Treasury bills have no default risk as these bills are issued by the government. So treasury bills are considered as securities without any default risk. In the meantime, interest rates of treasury bills are considered as a benchmark rate for many other securities. So treasury bills are zero coupon securities with maturities of 1 year or less. Normally, duration of treasury bills are of 4, 13, 26 and 52 weeks. So in conclusion, treasury bills are highly liquid. In the meantime, treasury bills are traded at a low transaction cost. Now let's look at certificate of deposit. Certificates of deposit are time deposit issued by the bank, and the bank pays the interest and principal to the depositor at the end of the fixed term. Now let's look at commercial paper. Commercial paper are unsecured debt instrument issued by the corporation. Normally, corporations issue commercial paper to fund their working capital or to manage short-term financing needs. Commercial papers usually have a duration from 1 day to 270 days, and commercial papers are considered as an alternative of bank loan for the issuing corporations, and around the world, corporations with high credit ratings are normally allowed to issue commercial paper. Now, repo market. Repo market has become popular around the world and it helps the traders to borrow and lend cash on a collateralized basis. A repurchase agreement is a sale of a security with a commitment by the sellers to buy the security back from the purchaser at a specific price. In the meantime, there is also a reserve repo, which is just opposite of repurchase agreement or simply repo. It is the purchase of a security. It is a kind of agreement where one party agrees to purchase of a security for the cash, and the parties also agrees to sell it back to the original owner at a predetermined price. Let's look at the summary. So in this lecture, we have covered an overview of money market instruments, and we have also covered details of different money market instruments like interbank loans, treasury bills, certificate of deposits, commercial paper, and repurchase agreements. In our next lecture, we'll cover calculating treasury bill prices.